Okay, welcome everybody to another Learn It Live webinar for the 19th of August, 2020. My name's Thomas Atkinson. As always, I'm joined by Tyra Nabella from FX Evolution. And today we're here to talk to you about advanced momentum day trading strategies. So hopefully everyone enjoys today's webinar. I think you're going to find a lot of really good content, and we're going to be introducing a few new things and a few new indicators that we haven't discussed recently on these webinars. Tyrone, how goes everything in your life right now? How are you going?
Yeah, just battling through the lockdown as all of our Melburnian friends are. So getting through it. But look, we're getting a market that is certainly starting to play the game. We're starting to see some really good moves, and it's probably a really timely webinar to do momentum strategies, because we are starting to see some strong momentum enter some of the majors. So yeah, looking forward to getting into tonight.
So just before we get started, everybody, it's obviously important to understand that this video or webinar is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation, or needs. This information is not to be construed as an offer, recommendation, or solicitation to buy or sell or participate in any markets today. So Tyrone, we always give a quick shout out to what has been some amazing tools over this crisis period as in this year. And that is the Pepperstone Telegram group, which you can find following the link that's shown above, and also the FX Evolution Trading Discord, which is our community of traders as well. So they both serve different purposes, but I highly recommend that you go and you look up both of these. And of course, the Pepperstone one, every single day, there's plenty of content coming from Pepperstone about all the live markets with heaps of things in the feed, and it's very interesting. It includes things like just like a wrap every morning, which is excellent. So what are we going to be covering today? Well, we're going to be looking at how to use currency correlation to your advantage. That's one of the most important things when it comes to trading, is understanding the correlation between all the pairs. Often when you first start, you usually start being a scalper, maybe move into the higher time frames, you become like more of a day trader potentially, and then you want to be looking at the top down. We always talk about the top down approach and being able to understand the currency correlation so that you can get a bit more of an edge in the market. So we'll be going through how to get that edge today using certain other momentum indicators as well. We'll be looking at some live chart analysis of the US dollar index. Obviously, the US dollar has been weak recently, actually incredibly weak. And we'll be talking about how you can spot that on the charts and whether the momentum is actually gaining in terms of further weakness ahead. Then we'll be looking at some popular day trading indicators to keep an eye on, and of course, live Q&A with our team. So if you have questions throughout this webinar, please make sure to ask them in the questions room. We'll either get to them throughout the webinar or we'll get through them as much as we can at the end. So any of your questions, remember, if you're thinking something, probably another 100 people are thinking the same thing and they're going to get value from that question. So we always ask this question at the start of these webinars, Tyrone, and that is, what type of trader style suits you? If you're working, which many people out there are, and you want to do this as a side hustle, you want to learn how to trade on the side, then potentially it's day trading and swing trading that are going to be the best things. If you can concentrate for a 2 to 3 hour period and always every day focus on that time frame, then maybe it's scalping. So always remember, how much time can we dedicate to our charts a week? And consistency is going to be key to trading success long term. So Ty, how do we become successful? Well, one of those things is currency correlation, isn't it? What are your thoughts on currency correlation? Did you do it at the beginning, or did you start to learn it over time?
Definitely didn't do it at the beginning, because as most traders do when they first start out, basically all you're doing is scalping crosses of a stochastic or a MACD. But once you start to analyze the markets properly, you start to realize that the correlations are really, really important for what you're trying to achieve. And you may not think it's important at the time, and it's not until you actually start to delve deeper into the basically, like it says here, the strengths and weaknesses of actually doing the analysis properly, that you realize how powerful it can be. And we're going to show you some examples tonight of how you can do it quite simply on some of the majors. And actually, even with the majors, sometimes people make the mistake of thinking that if they're trading the USD yen or the the Euro USD or the Pound USD, you don't have to worry about correlation because everything's correlated to them. But actually, they are very, very important. So we're going to go through some of that and show you how to break that down and using a top-down approach to actually include the correlation as part of the process.
We certainly will. I also just want to always remind people that no matter what kind of analysis or what kind of trader you are, you always want to be looking out for news events. So in terms of economic calendars, you must always look up some of those. There's plenty out there that you can get hold of. And things like the FOMC, or in particular, I'll just quickly circle down here, whenever a federal chairman Powell is speaking right now, because of the nature of this crisis, it's very important to know when those events are occurring because they can drastically change currencies very, very quickly. Also, just a quick thing that we always talk about, these are some on the screen right now, some of the key starting pairs and some of the things that you want to be looking at in terms of crosses as well. I'll include on that some of the things that we'll look at in the live markets right now using the top-down approach. So let's actually start by doing some currency correlation using the US dollar index. So here is the US dollar index, and Tyron, we have ADX on this, and we're going to be talking about that in just a minute, but I want to just show everybody, obviously we are in a daily downtrend here. The US dollar has been weakening, and everyone will be very well aware of that in terms of how much the price has moved down over the last couple of weeks. The reason we always talk about top-down approach is actually it's best to start on monthlies, and the reason we like to start on monthlies is it gives us just a very clear picture of what's happening with the trend. So if you showed anybody this chart, even if they were absolute beginner, never seen a candlestick before, they're all going to tell us it's going down right now. That's all what they're going to say. Then on a weekly, they're going to say it's going down even more. It's even easier to see. On a daily, of course, it's going down, but it did stop for a little while there. And potentially we are seeing a little bit of a weakening of the trend in terms of this indicator underneath, which we'll come back to. So doing the top-down approach, what you'll find is that if you just went through that monthly into weekly into daily, and you just literally just looked at this and said, the price is below this 20 exponential moving average, this red line here on pretty much all of those time frames, as you can see here, it's clearly that shown that the price is down, then why would you be buying the US dollar index? You'd probably be shorting it and going with the trend. That's the actual idea in trading. You want to be going with what the big traders are doing, and they're the ones that push the market. And you kind of want to go along with them until it becomes time not to go along with them. And one of the ways that we can do that is by using certain indicators as well. So I'll do that right now. I'm just going to load up this chart.
So I'm hearing people say, everyone's silently saying ADX, what is that? How do you use it? We'll give you a bit of an explanation. It's not one we've talked about in the past, but it is actually very relevant to what we're talking about tonight. So we'll give you a bit of an explanation on it in a minute.
Yeah, so recognizing price trends using price action is one thing, and that's obviously by recognizing peaks and troughs and things we talk about in many webinars. And I highly suggest you go to Pepperstone's YouTube channel, subscribe, and of course, watch some of our previous webinars where we cover that in more detail. But tonight, it's all about how do we spot momentum and how do we understand where the market might move to next. So indicators that may help us spot momentum, Ty. Well, one of them is pivots. And these can be used to show areas that you want to target during that period of momentum, and also whether the market is coiling and in a range that is not usual to how that currency actually usually trades. And you can actually spot that just by seeing the pivot ranges for that day. And price would have shown you it anyway, but it's a good double check. Then we've got average directional index, or ADX, moving averages angle, and I'll get Tyrone to explain that a little bit, and then a momentum indicator itself. So Ty, what about moving average angles? What does that tell us about the market?
Okay, so with moving average angles, you're really getting a lot of information from the particular time frames that you're looking at. Okay, so if we're looking at, say, a 4-hour chart or a 1-hour chart, and we're using the 20 moving average as our basis for determining how strong the trend is, the angle of its ascent or descent, depending on which direction the trend is going, is pivotal to tell us how much momentum is actually, basically working in your favor. Now, what you want to see is price actually accelerating away from a moving average. So not only do you want to see a moving average angle quite steep for a really strong trend, but what you also want to see is a good separation between price and that moving average, because it stands to reason that the moving average is representing the last 20 candles or bars of action on that particular time frame. So if price is accelerating away from that, it's giving us a really strong indication that the momentum is actually very, very strong. But what it also does, and this is what I like about moving averages, is that they also give you the hints that the momentum is starting to wane a little bit, and probably just as importantly, it actually gives you the entry or the re-entry to actually join that trend. Because a lot of people have trouble getting into a big swing up or swing down if they haven't got in at a good level. They're like a little bit stuck as to how you get into that trade. Well, when you use a moving average like a 20 moving average on your chart, a pullback to that moving average is a very, very strong indicator to actually get back into that trend. But you want to make sure that the steepness of it is actually still representing how strong that trend actually is.
Yeah, so when we go over and we have a look at the steepness here in terms of what's happened recently, which is where we saw the euro become incredibly aggressive out of a distribution range or a bit of a structure going on here in the market. Basically, we had a channel in the market after a large move, distribution, and then the next move up. We can see it steeply moved away from that 20 moving average, which is the red line here. At the same time as that was happening, we saw this ADX come up. So we'll go back into the slides. We'll talk about ADX. And ADX really is just a quick visual representation showing us the strength or weakness in the market right now. And that's one of the things we're going to be looking at. So the ADX is a market strength indicator. Obviously, the ADX quantifies trend strength by calculating a moving average of price range expansion over a given period of time. It's plotted as a single line with a value between 0 and 100, and it does not indicate a trend direction. It just shows its strength. In general terms, of course, under 25 is absent or weak trend. Over 25 to 50 is strong trend, and between 50 and 75 is very strong trend. Now, Tyron, we barely ever see 75 to 100, and really, if you do see that, it's pretty terrifying in terms of you probably are seeing a bit of a bubble and a huge amount of excess in that particular currency pair, commodity, or index.
Yeah, and generally when it's up in those levels, you're probably looking more for the reversal more than anything else, because it's obviously, very overextended. But above the 25 is actually a very strong indication of where the trend is heading, and you probably want to be aiming. It's a little bit like, picking where you're going to join that wave. Like, momentum is like a wave of movement. So what you want to be doing is you don't want to be getting on that wave too late. And quite often, although 75 and 100 is representing an extremely strong trend, by the time it actually reaches those levels, quite often the trend is actually starting to wane, and that's when you're more than likely going to get your pullback. So the optimal levels to actually get into this is above the 25 and below the 50, because that's when generally the trend is at its strongest.
So you can actually see here, Ty, and I'm just going to, before we go into the cross correlation part, I just want to show what happened here on the euro. So I'm going to draw up the resistance point. We are going to assume that you know quite a lot about support resistance and you know a little bit about structure in the markets already in terms of price action. But this level here, notice when this level is broken, we actually have the ADX going up above that 25 before the market closes above here. So we've already got it strengthening coming into the close. We have the price action, which is always going to be our number one kind of signal in terms of what we're looking at, because price action is the psychology of the market. We talk about this, we talk about the top down all the time. And then when it gets through and above that 25 and it breaks through, notice how it's already steeply moving up. So the actual ADX is going very, very aggressively while the price action's kind of coiling before that point. So there's been a bit of movement and it's been moving up here, Ty. So this is really showing us that when this break happens, it could be incredibly explosive, couldn't it?
Yeah, most definitely. And actually, I've got a question I might answer it live because it is probably relevant to the room. Can you use the ADX indicator with other indicators such as MACD? You absolutely can, because with the ADX is giving us something very, very different to a lot of the other indicators that we generally talk about. And you must remember that although it is pushing above the 25, this is not giving us a particular direction, okay? All it's saying is that the trend is strong. Now, when you start incorporating other moving averages, MACDs, maybe stochastics, if you're using the different types for a particular trend, even Bollinger Bands, they're giving you the direction. Okay, so they're basically giving you the strength of the direction. All the ADX is doing is telling you how strong that trend is in that direction. It's not actually telling you which way it's going, whereas MACD actually does. So using them, they do actually complement each other when you want to use them together.
So here we had the ADX, of course, strengthening, and this was around this kind of 15th of the 7th. And then if we go over to the US dollar index and we put a vertical around that same point, so if we go to the 15th of the 7th, go over here, we'll notice that at the same point, pretty much, we are about to break through potentially support on the US dollar index. At the same time, we have that ADX increasing. Remember, ADX isn't picking the range direction in terms of which trend we're on. It's just saying the strength of that trend. So both of these signals are really saying momentum is picking up coming into that event. Now, when it breaks through, we know that's actually our trigger from a technical analysis standpoint. The price action is saying this support was support before. Now it's been broken, we're moving to the next area. And while the ADX kind of increased, we can see that the market actually went down. So we had the market going down while the ADX was increasing. Then the ADX actually stopped increasing and we started to see that distribution after that point. So we started to see the structure come back into the market. So what the ADX can help us do is it can just help us give us that little bit of extra information saying as it's rising and it continues to rise, we want to be continuously in this strength of this trend. So we want to be basically staying in it, and maybe we could use it as a trigger point tie. Like it hit almost 75 here. So it was a very aggressive trend. Now that could mean that it's about to stop. And when it starts decreasing, that could be the point where we start saying, okay, well, the trend is over for now. We need to make a decision based on price action, what we're going to be doing. We're quite a far away from the moving averages right now. So potentially this could be a profit zone for us as well. It got us in, it showed us momentum was coming in, and then the momentum obviously broke with price action, and then that told us to continue going on in the direction of the trend. So that's one way we can use it, and we can actually bring ADX together with other indicators as well. And one of those is pivots. And pivots are a big favorite of a lot of people out there. We don't always talk about them, but pivot points are certainly very important when it comes to day trading and intraday trading. So if you're somebody that wants to be in and out within a session, pivot points could be giving us a bit of an idea on not only the momentum of the market, but on top of the momentum of the market, Tyrone, we could also be seeing potential areas for take profits and stop losses, couldn't we? Pivot points are based on they're excellent at that type of stuff. So they're based on the average of the high, the low, and the closing price, and they give us projections based on this average. So let's actually look at the market now, and I've already got a pivot example just quickly up so we can see that. And here they are in terms of pivots on the charts. The big black one here is the central pivot, and then these other ones are the R1s, R2s, R3s, and we'll explain those in a minute, and then the S1s, S2s, and S3s. So firstly, we want to do cross correlation before we bring it all together. The first thing is, what's the US dollar index telling us right now? Well, at this point back here, the US dollar index was obviously saying weakness. And at this point right now, we've just seen a close. So we're pretty much looking with further weakness in the US dollar right now. What happens usually when things break key supports, Ty, they often come back and they do what?
Yeah, basically get roll reversal, and that's exactly what you're looking for with the with the ADX swing. So it's and you can see that, like we talk about roll reversal all the time, like that we believe in it very, very heavily, and that's simply because it does work. We know that it works. So when you can start incorporating things like the ADX. Now I know, look, a lot of people are probably not familiar with this indicator, and some of you are. I can see in the comments that some people have been using it for a long time, which is awesome. And look, and I'm also getting some questions about the other lines that are on the ADX indicator here. Look, that schooling is probably past what this webinar will allow us time-wise. So it's not that they're not important, but we're going to focus on the main blue line of the ADX at the moment. That's the main line, the signal line. What we are going to do, though, we are going to do an advanced class for all of our advanced members on the ADX and break it down properly, because we know people have been asking for it. So The smaller lines, don't pay too much attention on what we're talking about tonight on those, because it'll take too long to explain. But just focus mainly on the blue, dark blue signal line. That's the one we're referring to tonight, to be above the levels that we're talking about.
And ultimately, that's the one that we really want to be looking at anyway. So first thing is, anybody could see that the US dollar index is weakening. Now, at the same time as that US dollar index is weakening, we can find in the Pepperstone platform the euro index. So both of this one particularly is showing us a little bit of a different story. While the US dollar is weakening, we would expect the euro to be strengthening. It's the nature of the US dollar index. If you're not sure of how the US dollar index is made up, definitely put that into a Google search. It will pretty much change the way that you approach analysis. You're always going to go back to the US dollar index first, look at that because it's still the major right now, get the trend direction or get some kind of idea of what's going on, and then come into the other pairs. So the euro dollar is actually kind of not broken a new resistance just yet, Tyrone. It's actually hit this resistance up here at the 1054. We know the ADX is slightly strengthening, but at the same time as that, well, let's have a look now what's happening on the euro. So what are we kind of cross-correlating here? Well, we've cross-correlated the US dollar index is quite weak. We've correlated that the euro index is looking for a break of a new resistance. Ideally, we would see the euro index basically move up, close above, as we always say, give us that confirmation, and then come back down, and basically where the previous resistance was will be support. Just like we had on that US dollar index, we would like this to close above. Now, what's that going to be telling us? It's going to be saying the euro dollar index is ready for its next move up and next move towards strength. If we go and have a look at the euro actually has moved before the euro index. So that can mean one of two things. That can mean that if the euro index also breaks above, we are now looking at an incredibly strong euro US dollar strength, because we have the euro index breaking above, showing it's ready to move to the next point. The US dollar index is already closed below, and the euro US dollar is preempting its own index in terms of strength. So those three things together are saying that typically, if we do see the euro index also break, we're going to be in for quite a large move, and it's already done its distribution and another big move up and another further weakening of the US dollar. So it's that kind of correlation that I like to bring in. And then once we've done all of that together, then we can start to actually break down potentially what's happening on the euro US dollar itself. So what's happening right now? Well, something very similar potentially could be occurring as the US dollar index. We might see it pull back to the previous distribution range, come back down, and then we're already seeing this ADX move up a little bit here. But at the same time as it comes back down on a smaller time frame than the daily, we might see it hit a moving average as well. Maybe we've got a 20 moving average here. Maybe we've got a 50 moving average here at that time, all acting as dynamic support. So everything happens at around this 1.88 area, and that would be a very, very nice area for it. We could also be hovering on the euro index potentially at that point, still at the resistance, see them all break at the same time, and that would give us a lot of cross correlation, wouldn't it, Tyrone?
Yeah, it certainly would. And actually, I'm just going to take this opportunity to answer another question that has come up about 3 times, so I'll share it with the room. The ADX, like all indicators, is best and most useful on the time frame that you want it to be. Okay, so if you're looking at the ADX indicator and you've got it on a daily chart, that's representing the trade or the trend, sorry, on that daily chart. So on a 1 hour chart, you can absolutely put it on a 1 hour chart, but it's going to be basing itself and adapting itself to the price movement on that particular chart. So it can be used on any chart you like, at any time frame you like. Just be mindful that it is most relevant to that particular chart. Now, of course, you can do multi-time frame analysis on it, and you can say to yourself, well, I've got it on a 4 hour and it's starting to trend up really, really heavily on a 4 hour. That can give you a bit of a trend bias. So you can go back to a 1 hour trend and then you can say, well, the 4 hour one's very, very strong. But it's very important that you don't take it as gospel. If you're looking at it on a daily chart, say, for instance, to give you an example, if you're looking at the ADX on a daily chart and price action looks like it's moving in a very strong uptrend and the ADX indicator is heading in an upward direction, that means nothing for a 15-minute chart, okay? Because a 15-minute chart's ADX could also be going up in a very strong upward direction, but the trend could be absolutely down. So you really, when you're using an ADX as a multi-time frame tool to basically use your just to get some more confirmation, you don't want to be going much more than the time frame directly above. You don't want to be going 5 or 6 time frames down, because there are many trends that are going down on a 15-minute and a 30-minute that are completely opposite to what the daily is doing. Okay, so just keep them pretty close to each other.
Now, the ADX will be also used, Tyrone, as more of a tool to help your already existing methods, okay? So maybe your method is price action. If it is based on price action, obviously we give you a big thumbs up. That's awesome. But the ADX will be used as a supplement to that. So you bring it onto your charts once you've done your analysis on the price itself. It kind of just gives you that extra little bit of confirmation that you're in the right direction or you're in the right momentum. And as it goes up, it makes you feel good. Imagine if you're in the trade here, you're buying this euro long, and this is a 5-minute or 15-minute or whatever time frame, and you're seeing that ADX continuously going up at the same time as price is going up. It's just that extra confirmation that momentum is still in your favor, and that's what helps really. Having confidence in your trade is very important, because when you have confidence in your trade, you can hold it for longer. And I'm sure we've all done this before, Tyrone, where we've traded and we've closed an order a little bit early from our original plan. We've done so because we got scared. So having further confirmation and something that comes along with you can be good for that perspective. Now, let's bring in the other point there that we're talking about, which is pivots. And the reason why we're going to bring pivots in is you'll see all these lines here on this particular chart, and you'll notice that these lines are actually very wide today because of the pound's move. So sometimes the currency will actually be in a tighter range. Now, as we know with price action, the longer something coils in a range or stays within a range, often the more explosive it is. And yesterday that was very true for the pound US dollar. So we see yesterday there's a big move here on the daily, and this is the daily here. And when we go down, these are daily pivots. So these are the ones that are based on those averages there. Now, what did we see yesterday in terms of the range of the pivots coming off the previous day? So remember, it's based on the previous day, and then that becomes your central, which is the black one here, your R1, your R2, your R3, and then your S1, your S2, and your S3. So what did we see? A very small range based on the previous move. So effectively, the market was coiling the day before. It wasn't moving very much at all. The pivots showed that, and then the pivots actually pushed through to the top end of the range. So as in the R3 was hit, and that means that we're going to have some very aggressive moves, not only through that day, but probably we're going to see even further follow-on effect from that. And we certainly did see that. So when you have this really tight range, the pivots are really showing you that the previous day was a very small move. If we're moving up with big candles, then we're probably going to have a bit of an explosion. Often a very small pivot day, the pivots will mean less, but it shows you that the price was so compacted compared to normal. And that compaction is important because it means that the market was coiling and getting ready for the next move. The other thing pivots show us is that they like to touch certain points along with the trend. So notice here we have this very aggressive trend coming up. When the pullbacks happened, notice how the pullbacks came close to the central pivot each day through this aggressive trend. So if we were following this trend and we were thinking, oh, we're going to follow it from the perspective of the 20 exponential moving average, it didn't happen. The pound was just too aggressive and too fast, but we could have followed it by taking the pullbacks to the central pivots. And there's a big statistic here, isn't there, Tyrone, with how often markets like to come back to central pivots.
Yeah, most definitely. And you can, well, I mean, you can see for yourself really, like those black other daily central pivots, and you can see how often price does come back to them. It's not very often that a day goes by where they aren't, basically penetrated or at least touched. So actually another question on pivots. A few people are asking in the room which particular pivot indicator we are using. So look, there are many pivot indicators that you can use. It's important that you actually have them set to the right GMT of your platform. But for this particular one, I think what we can do is we'll provide it to the people at Pepper. So anyone who wants, if you haven't got a pivot indicator, I think we can do that, can't we, Tom? We can send this off to Pepperstone. And anyone who wants it, I think they can just send them an email and they can get it done. It's a free indicator, or even a link to it, or where you can download it.
We'll also put it in that in our Discord room for people as well, that they can get it from there if they'd like.
So it's a free indicator, and it is very useful. Yeah.
This is literally just a free indicator that you can find on MetaTrader 5, the website itself. So I'm not using anything special here, everybody. But I just wanted to show when pivots push to certain areas, how that can also help you ascertain as an intraday trader potential take profit zones that you want to be looking at. So let's say we are in this trend and we're trading the pound long. Now, in hindsight, obviously, we can say, oh, very cool. We could have held it all the way from here all the way up to here and we would have made maximum profit. But that's not really the way an intraday trader or a day trader works. It's not, we want to be in, we want to be out, and ideally, we want to be out in the day, don't we? So one thing that usually happens with pivots is you'll often see not only a touch to the central, but you'll see a touch to either the S1 or the R1 during that day. So one thing that happened here is notice the central was touched in the direction of trend, obviously, it came back down, it bought off this level. Where could we have set our take profit? Well, we could have, without kind of any support resistance or any other knowledge, we could have potentially highlighted this R1 and taken our profit there. Now, would we have gotten the maximum profit for the day? No, we wouldn't have. But the market certainly did come back down the next day and actually came back down to the central pivot. So it now allowed us to potentially get into another swing. So we can use these R1 and S1 areas as a bit of an idea where we might want to be taking profit, and it will be the more statistically high chance that that will happen. So you could be on a 15-minute or 5-minute or 30-minute chart, and we'll go down to one of them right now, and you might see something and you're in a you're looking at that trend. So let's have a look over here. We're looking at the bullish trend. Let's say over here, let's say we want to see it come back down to the central. It didn't come to the central, hit the 20. We might say, okay, well, we like this pullback. We like what it's saying. What are we going to take the profit at? And our original idea was to take profit here. Fair enough, there's a 200 there. But what we might say is we say, okay, well, we'll take it at the R1. So instead of taking it at any other point, we think that if it gets up here, the market's going to try to be strong. It's going to most likely touch another pivot for the day other than the central, and it touches the R1. We take our profit, pretty happy with that. It does keep going, but the point is that it got us in and it gave us an idea of where we want to go. Double bottom down here, where do we take the profit? The R1. Now the R1 actually is also perfect here to the previous resistance. So this is actually an awesome take profit, and the pivot totally agreed with the take profit zone. We can see the rejection off the market as well. So pivots just give us a bit of an idea of seeing things that are based on stats, obviously based on that previous daily move. It gives us an idea that's statistically likely to occur. And we also know that the central pivot is often touched per day. It's statistically likely that it will be touched or will come into a range. So then what you can do is you can box around the central. So maybe you create a range around the central as well, Ty, and then you trade off that range. You'll notice today, what's the pound US dollar pivot on? Well, it's on the 50 on the 1 hour. So we've got the 50 exponential moving average here, and we've also got the central pivot. Now, if that was also previous highs, which we can see is wicks over here, then we can box this range and say, well, within this range makes very good sense for the market to potentially come back down to, test these areas, and for us to look for the thing we always talk about, Ty, which is the price action movement, lightning bolt move in the direction of the trend. So all of that can be brought together when we're talking about pivot points. And remember, it doesn't just show us that the market is expanding, but it also shows us when it's contracting. And when it contracts, the aggressive move off the contraction day could be a serious opportunity, can't it, Ty?
Yeah, and it gives the pivots give you really, really good targets to go to, which a lot of people do struggle with, even if there isn't any, close resistance in front of you. Some people can struggle a little bit to take profit, and look, taking profit is probably an underrated thing when people are trading. People think that it's not as important as long as you're making money, but it's actually vitally important to know the right zones to at the very least, reduce your position, or maybe move your stop loss up and break it even. So having these levels to be able to work on, gives you some opportunity to actually either take profit off the table and let some run, or at the very least take your risk off the table by moving your stop loss up. So that's where people come a little bit unstuck. Like sometimes traders can get a little bit unrealistic on their expectation of a trade. Like they might be trading a 15-minute chart, no idea where to put their take profit. They might be up 80 or 90 pips and thinking, oh, this is going to keep going. But what if you're at an R2, or an R3? You
Yes.
want to be locking in some of that profit Where if you're not aware that it is actually in that zone, you could be hoodwinked into believing that it's going to be an ever-moving trend. It's not going to stop. So using them as a little bit of a guide to identify where you can actually take some profit and lock in, move your stop loss up, and do all those sorts of things that actually protect your trade is a really important part of using these. So it's not just for entries, it's just as important for taking profit. Now, I've got a question that I will quickly answer on correlation, because it is probably a little bit relevant to, I guess it's a little bit relevant to the pound here, but the question is, we've got someone here who only trades the euro-odd pair. So basically, it's the only pair they trade. Can I use correlation to pinpoint the price where it's likely to go based on the correlation? Do I need to analyze the Aussie USD every day before taking a trade on the euro-odd? Okay, so look, what I like to do and what we like to do as a group when we're actually doing this sort of correlation is working out not only what the Aussie USD is doing, but also just as importantly what the Euro USD is doing. They're the two major pairs that are going to affect what happens to the Euro odd. Now, are they a direct correlation? Not exactly, but what they will give you is a good idea and a good understanding of which one is going to be stronger. Now, as an example, if you're going to look at the Euro odd, obviously, if the euro is going up, the euro is going to be stronger than the Aussie. So if the Euro USD, say for instance, has an ADX, for instance, going up above 25 and looking like it's starting to really shoot up, and the Aussie USD has an ADX that's actually dropped below 25 and starting to look down, you're getting a little bit of a clue there. That's just to bring in the ADX into your correlation analysis of what's happening between those two pairs based against the US dollar. Because what happens in those two pairs against the US dollar is going to have a very important reflection on what happens on the euro odd. Okay, so hopefully that answers your question. But not only do you want to look at the Aussie USD, but you also want to look at the Euro USD to base your analysis on what's going to happen with the euro odd.
Another couple of other good questions here, just going back on the pivots, Ty. So not only can they give you a good area for your take profits if you're not exactly sure where to take profit that day, as in the R1 or the R2, remember the R3, and you'll just see this by putting this indicator on your charts, or the S3, are very infrequently kind of hit. They're very infrequently hit. And whenever they are hit, notice how here, the next day, it almost taps it, comes open to the next day, sells off that area. So it very infrequently will ever hit these particular very, very far away pivots. And that's because of the nature of what the move's looking for. The thing is, though, you can put stop losses behind the other pivot on the other side. So you might say, okay, I want to buy it here and I want to take my profit here. Or potentially you're looking at buying it here, you can put your pivot, you can put your stop loss behind the central. You know that if it comes down, it will usually find some form of support at that point. So pivots can be used for those reasons as well. You can use them as stop loss and take profit areas. If you have other indicators around those points, or you have maybe things like price action points, like support resistance, or you have a psychological number or something like that, all of these bring together the reason you want to be in the trade. Remember, every time you should be trading, try to use ultimately 3 to 6 reasons that are not all the same, or not all the same indicators that are showing you a very similar story. We want to be showing ourselves 3 to 6 reasons that are all different to be in that trade. So pivots can be very, very handy in that situation. Okay, so obviously we talked about the fact that we want to be using things like potentially the pivots or potentially the ADX, moving averages, etc. But that does not change that we still want to be using price action really as our base fundamental kind of thing that we want to be looking at here from the technicals. When we see ranges and channels and things like that, we know that when markets break, we can bring in things like our pivots, see if it was coiling, see if it's a smaller range. We can summarize there also if the ADX is increasing at this point before the close above, then that could mean that the actual momentum of the market is increasing, and therefore we want to be interested in taking that trade long. And all of these things just help us to build the story, but it still starts with that price action. And we talk about channeling markets all the time and that they give us levels. Now, what if we had an R1 at the same point that we had the take profit from the channel being the range? All of this just gives us multiple reasons. Remember that 3 to 6 reasons to be in the trade. It's all the same thing. We're just basically trying to figure out a way of getting into that trade with the most statistically likelihood of us being successful. And ultimately, we just want to be successful ultimately every single time. Yeah. Unfortunately, we're playing statistics. So therefore, things like what we bring up every week during this crisis period, during this high volatility, is we do not want to FOMO tie. We do not want to FOMO in the markets, and we want to be using as much of our strong psychology and therefore indicators showing us that we should be in the trade, we should hold it, and we don't fall into any of these kind of traps in terms of the 14 stages of trading psychology. We don't want to be there. Ideally. Yes, so some of the patterns still remain that we could be using with pivots in ADX would be things like this: double bottoms, ascending triangles, inverse head and shoulders, etc. I will paste in the room here a cheat sheet that we give away for free. So if you're interested in that, definitely do sign up for that one. You'll basically receive it on your email, and you can look at some of our favorite patterns. And whenever you're looking at price action, we always want to be using as much as possible confirmation breaks, confirmation closes. When we're dealing with pivots, we can basically say, okay, well, it's hit the central pivot. How has it reacted to that central pivot? We know it might touch that zone, but that doesn't mean that we necessarily want to buy it just right in there. We can go back to the smaller time frame. So let's say over here, and then look for that lightning bolt effect tie. So we can basically look for the move where the market comes down, hits the level, lightning bolts up, as in it hits basically a trough, then moves up, hits a peak, comes down, makes a higher trough, and then goes up and makes a higher peak. And that could be on a 5-minute time frame around the pivot. But this one differentiating factor being the trough, the peak, the high trough, and the high peak changes your success tens of %, doesn't it, Tyrone?
Yeah, most definitely. Now, incorporating that sort of price action into your trades makes a very, very big difference, especially around key levels. So, yeah, vitally, vitally important. Now, I've also got a few questions here just asking about particular pairs. Can we have a look at them? We don't, this is a teaching webinar, so we don't actually identify any pairs to analyze, but we are doing that in our webinar that starts in, well, nearly 20 minutes. So actually Thomas will paste a link for you in the window if you like. So anyone who'd like to attend that, and you can put your questions on what's going to happen or what we think is going to happen on the current analysis pairs. We look at all of the majors and some of the cross pairs as well, and you can put some requests in there. So we'll pop that into the chat window, and you can just click on that. That one starts in 20 minutes. So we'll be looking at individual pairs in that webinar.
Okay, so we've basically discussed quite a few of these things today, and basically I think everybody probably is interested in pivots. I'm sure you are, but as we see the pound come back down potentially to the central pivot. But yeah, the main thing that you want to be looking at is always that cross correlation, understanding structure, and remember the ADX is only a support tool to your overall understanding in the markets. What we want to be doing is always making as much decisions as we can using the price action and the psychology. Now, when it comes to times to trade for day traders, for intraday traders, that kind of thing, if you're looking at momentum, you're looking at potential break levels, getting into that excitement, we want to usually be coming in around 30 minutes to 1 hour before a market session open. Why do we want to come in earlier? Well, often breaks come in just into the session, and we also want enough time to analyze those 15-minute charts, 1 hour charts, 30-minute charts, all of those types of good stuff for our intraday sessions. We want to be looking at the ADX. Is the ADX increasing into the break? All of those types of things will be important. So we also want to target pairs that are most likely going to trade around those sessions. So if we're trading Asia, Australian dollar, Japanese yen, yuan, gold, all of these things move very heavily during the Asian session nowadays. If we're in London, Great British pound, euro, those type of pairs will move very heavily. And of course, we want to be looking at the daily and 4-hour closes as much as we can to get an idea of direction. No matter what anyone else says, trading in the direction of trend is the most important thing for you to do as long as you correctly identify trend. We always want to get better price, and it's very hard to take, I guess you would say, worse price when the market's going up. We like buying the dips. Everyone likes buying the dips. The problem is that sometimes it is better to actually go with the flow. And I think there's no greater certainty of seeing that recently, Tyrone, than when you look at the S&P 500 within the Pepperstone platform. You'll notice it's done a big V shape. It's confirmed. It's now hit an all-time peak. And that obviously showed us that while many people, of course, are incredibly bearish on the fundamentals, the technicals continued to tell us buy for at least the last couple of months. They were all up and the trend was significantly up. So again, Ty, the trading groups, just a quick reminder on those. Obviously, we have the sound risk management strategies, 1 to 2% of capital. And I just want to always so let people know that if you're interested in finding out more about what we do, and obviously our private Discord trading members area, where we do Monday, Tuesday, Wednesday, Thursday, and Friday wraps and analysis of the markets, we are running a 7-day free trial at the moment. So you can literally sign up, experience it, and see whether it's right for you. Because I think that ultimately, if you're in a group and a community of people, of like-minded people, hopefully focusing on price action, because that is certainly one of the things that we do push, that you can share each other's ideas, find out more about the market, and ultimately be your own master. And that's what we all want, isn't it, Ty? It's what we did when we first started, and we've gone through the trials and tribulations to hopefully help you not to have to go through those things. That's for sure.
Most definitely. Now, most important, team, we've got a questionnaire at the end of this webinar. If you could just take a couple of seconds to fill it out. There's not many questions there, but it certainly helps us and Pepperstone provide you with the information that is most relevant to what you want us to do in the future. So if you could take your time out just straight after this webinar, if you wouldn't mind filling out the questionnaire and just giving us your thoughts on how this one has gone, and also it gives us a lot of planning and ideas for the future ones that we do every fortnight, because we want to obviously keep the content relevant. I know we've got some new and exciting indicators and things that we're going to talk about in the coming weeks. So there's a lot happening, but your feedback is very, very important to us and Pepperstone. So please take a second to fill it out.
Absolutely, Ty. So we've answered quite a lot of questions here. But I would say that, mainly whenever you're looking at the markets, you want to focus on yourself the most and be real with yourself. And at the same time, you want to use, as we always say, 3 to 6 other reasons to be in the trade. Make sure you understand the indicators that you're using. And we highly suggest that you consider using price action as one of your base case reasons. Trend and price action, they will be your friends over the long run. I cannot stress it enough.
Can't stress it enough. And look, the ADX looks sexy. It looks really cool. And I know you just want to get out there and trade it and not look at anything else. But yeah, trading with the ADX only and not using price action is like having tomato sauce and not having any barbecue sausages to put it on. Tomato sauce is a great complement to barbecue sausages, but you don't want to have tomato sauce by itself. Okay, it's the same thing with indicators. They're there to complement and make something better. So it's very, very important that you get the barbecue happening before you put the sauce on.
Couldn't have put it better. Okay, well, we'll see everybody in 2 weeks. Otherwise, we'll see you at the next webinar that we're running in about 10 minutes. And we wish everybody the best in the markets. Obviously, there are great weeks at the moment, and there are always going to be tough weeks out there. That's the nature of trading. So good luck, and may the pips be with you. Hopefully.
And don't forget, and for all the questions, we had a lot of questions tonight about whether this is going to be recorded. Absolutely, yes. It is recorded, and it will be available on the Pepperstone YouTube channel tomorrow morning. Okay, so if you've missed any of it tonight, or you just want to recap on what we've talked about, just check out the YouTube channel tomorrow. Pepperstone's channel will have it up there for you to basically watch it as many times as you like. So if you have any drama, then we'll also we'll send the pivot indicator to Pepperstone support. So anybody who wants that, just email support and they'll send you a copy of that.
Okay, thanks very much, everybody. Have a great night, and we'll see you soon. Bye.
Thanks, everyone. Good night.